You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time for TWIFO, This Week in Futures Options. The final program here on our broadcast week on the old network. Also, usually a nice fun one to really look back on all the week's activity on the other side of the fence, the futures option side of the fence. Maybe some crude, maybe some gold, maybe some equity indices, maybe some ag, some dairy. You never know what the heck. Some crypto. What the heck will make it onto the show this week? So I got to tune in every week. It's a different show. Every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. We make our content available pretty much any way you want to get it. If you want to really do a deep dive into the archives, go back into a decade-plus history of shows on our network. The easiest place to do that is our website or our mobile app. If you want to just subscribe and let it come to you on your device of choice on your own schedule, iTunes, TuneIn, Stitcher, Pocket Cast, all that fun stuff is available on all those platforms. And if you want to join us live, hear how the sausage is made, maybe ask some questions live on the show, join us every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr. You can listen live, you can ask questions, all that fun stuff over there on the Mixlr chat. And again, however you listen live after the fact on podcast, wherever you get the show, make sure you hit us up. Questions, comments, insights, we do like to hear from you guys. And this is normally the portion of the show where I would toss it over to my cohort, my partner in all things commodity options crime, Mr. Nick Howard of Bantix Technologies and Quick Strike fame. But Nick called away at the last minute, heading on out, called away back east to New York. I do believe this is the first show he has missed. So we hope things are working out for him as he's racing off east to deal with some stuff. And instead, usually, this is also the part of the show where I would turn to my left, to my immediate left here in the studio, and welcome on our newest addition to the program, our newest program partners, the folks at FTSE Russell, and Sean Smith, who is the managing director of derivatives licensing over there at FTSE Russell. But he unfortunately was struck down with pneumonia right before the show. So poor Sean, our thoughts go out to him. Clearly pneumonia not conducive to a good programming or even to speaking much at all or getting out of bed. So he's convalescing, but I'm pleased to say I'm not alone on the program today. Nope. Our CME hot seat guest has been bumped up to a full program co-host. How you like that for a promotion there, Tim? He is Tim McCourt, the global head of equity products over there at CME Group, and now my co-host for TWIFO. Tim, welcome back to the show. You may be regretting coming on in a few minutes, though.
Hey, Mark, thanks for having me, and no worries.
Yeah, we're going to put you to work today.
Hopefully the kind of curse of the second seat doesn't take me down like it did Sean and Nick today, but I'll do my best.
Yeah, he lasted a whole week. He was on last week, and then he was promptly struck down. So, yeah, hopefully when you get back to your desk there, you're not going to be struck down horribly. But, Tim, of course, you have been on the program before. In fact, it's good timing to have you back on right now because your kind of dual domains, your dual purviews are very much top of mind for a lot of our listeners out there. Of course, you're all things equity, so we're talking the indices, all those products out there as well. Also, a little bit of crypto has fallen under your domain over there as well. I know a few people probably have a few questions, are a little bit interested in that product category. We'll get to that in a little bit of a tease for our listeners there. They can stay tuned for a little bit of crypto coming in a few minutes. But let's start in the equities realm. It's good timing to have you on the show right now, Tim, because this is, normal where we'd also talk all things Russell here. And it's been a great week, actually, to be looking at small cap, because all this talk out of trade wars and everything else going on, that's predominantly a macro picture. That's predominantly a large cap picture. The small caps, they're not quite immune, but I would say they are more insulated from those types of pressures than the large cap stock. So as a result, while all this tumult is going on with the broad indices, the Russell 2000 is quietly setting new records, hitting intraday highs on Wednesday, closing at a new all-time high yesterday on Thursday. As for the week, as we're looking here right now, closing at 1630 or trading around 1630, up about 20 points here for the week. So a very, very active week for all things small cap out here. I know, Tim, this has been a recent addition, about a year now or close to it. It's coming up on a year anniversary that you guys have added the Russell product category back into the CME equity family over there. What's been catching your eye? What's been going on out there in Russell land over the last few weeks, and indeed since you and I got together here last on the show?
Yeah, that's right. We're coming up on the 1 year anniversary for the return of the Russell 2000 back to CME. Which that came back in July 10th of 2017. So just a few weeks shy of the 1 year anniversary, and it's been great to have the Russell back home at CME Group. So far for about 2018, we're averaging about 140,000 contracts per day, which is great volume for the Russell 2000. And we've also seen quite a substantial uptick in options on futures on the Russell 2000 since returning to CME, where we're doing almost 4,000 contracts a day on the options on future flavor. So that's also something we're very pleased with. And I think, Mark, you're right. I think what's interesting is when you look at the macro landscape for the index products, the Russell 2000 is a little bit immune, so to speak, from the trade war kind of rhetoric and rubric that's going on in the marketplace. And it was also a huge beneficiary in Q1 of some of the U.S.-based tax legislation. So just given the notional value of the component stocks in that index, it tends to be a little bit more U.S.-centric in its influence or its reaction to macro events. And that's led to some very exciting and unique trading opportunities, both in Q1 and as a way to spread the Russell 2 against other indices, whether it be the S&P 500 or 400 or the NASDAQ or even the Russell 1000. These are great opportunities when the indices don't necessarily behave in the same manner or react with the same order of magnitude of volatility to some of these events. It presents great opportunities for the market to put on some new trading opportunities.
You're out there. Part of your job is to interact with the institutional customers, the end users, across a broad suite of equities. Have you seen in the last few months, and maybe, who knows, even in the last few weeks, given this data points we're rattling off here, have you seen an increased interest from a lot of those end users? Are they asking you more about Russell? Are they showing more interest in this? Is this kind of a narrative you're seeing? Obviously, we're seeing it playing out in the numbers, but are you seeing it anecdotally from the end users as well?
Absolutely. In terms of as the volatility has returned to the U.S. marketplace and kind of equity indices across the globe, institutional investors are revisiting what their strategies are, looking at how they're allocating some of their passive index resources. And the Russell 2000 is a prominent index, and it is part of that decision thesis that people are making in terms of looking at the returns they could generate versus allocated capital. I think the other thing that's interesting is when you look at some of the volatility we've seen, whether it be in the S&P 500 or the Russell 2000 or the NASDAQ, is that all of these index properties are reacting and responding very well to the market conditions and the futures continue to be the product choice of institutional investors when looking to manage their risk. So when we look at things like not only just the index themselves, but some of the product features that we offer on these indices, such as BTIC, which is our basis trade index at close mechanism. And we actually just this past Monday, we launched TACO, which is trade at cash open on the S&P 500. These passive indexing institutional clients who are very much so benchmarked to the open and the close, when CME partners with our partners such as S&P, Dow Jones, NASDAQ, and Russell, and overlay some of the product innovation that we have on the future side, these make for great products and great uses for ways for the institutional community to put their investment thesis to work. And we've seen BTIC respond well. We've seen outright volumes respond well, and we're very pleased. So I think it's something that's definitely going on for the institutional investors at this point. And I think specifically for the Russell, the Russell 2000 is only going to become more important the next few weeks here as we head into the Russell reconstitution. We're at their annual add delete of constituents, where they'll be announcing that final list in a few weeks. This is where I would hand it off to Sean if he was here for the exact date, but I forget the exact date they'll announce the list. But that recon is happening on June 22nd, so that's going to become a very topical investment thesis for investors for sure over the next 6 weeks or so.
Yeah, he plugged that on the last show, and that will, of course, be an interesting driver of activity. I'm looking forward to doing the show around that and seeing kind of what results. Looking at some interesting data points here for people out there who maybe are looking at Russell, maybe comparing, contrasting it to the S&P or even to the Dow. It's pretty much this data comes, I think, through Thursday, I think. So it may have changed in the last 24 hours, but the net numbers should be pretty close. It's outperformed pretty much the Dow, S&P, and the NASDAQ over the past 3 months. It's up about 4.5%. Dow and S&P, as of the time this was compiled, are both down, while the NASDAQ is up, but only up about 2%. If you're wondering why Russell is rallying, we mentioned before that insulation factor. Russell 2000 companies on average derive about 21%, only 21% of their revenues from overseas, while large cap S&P 500, they do 30% or more of their revenue overseas. So a little bit of that insulation factor is helping to translate to this outperformance out here in outperformance in Russell. Speaking of outperformance, let's pull up the options as we are wont to do here. It is This Week in Futures Options. After all, you guys, as always, can follow along, not just with the Mixlr live feed, but with the reports themselves, cmegroup.com/TWIFO, TWIFO. If you do that, you can pull up reports just like I'm looking at right now. If you pull up the E-mini Russell 2000, you'll see not only has it been a strong week for the index, but a banner week for the options as well. The open interest up over 25%, 25.5% increase in OI. high this week. So people are clearly out there slinging themselves some Russell 2000 options. And if you're saying to yourself, which one self is number one with a bullet out here? If you said to yourself, the June week 1 1300 puts, I'd be surprised, but you would be right. Of course, the index right now right around 1630. So these are, shall we say, substantially out of the money puts. You dig into the paper a little bit, though, and you'll see why these are actually lighting up. Looks like it was actually a bit of a funky 1x2 put spread going up. Pretty far out of the money one in the week ones here in June. Again, the weeklies are very much a lion's share of the narrative out here in all of the equity options products. And it looks like a funky 1x2. The 14-quarter 1300 1x2 is the reason that one is lighting it up. It went up 1x2, 171 of the 14 quarters, 342 of the 1300. So exactly 1x2. That's funky. That's a weird non-round number is going up there. Went up on Tuesday and again on Wednesday for the same size. So 2x that volume for that. So someone clearly wanting themselves a little bit of out of the money. I'll have to dig in, look to see if they bought one or sold two. Usually that's the way these trades go up. So that could probably be the case, in which case he doesn't mind specking to a lot of downside in the index. And if it breaks through and does even more, he's got a little bit of cushion, but he doesn't mind picking up the index around the 1300 level. Given the fact that it's around 1600 right now, kind of hard to argue with that logic out there. I'm sure more than a few people would be happy to pick up some Russell at 1300 out there. So the weeklies are tearing it up out here again this week. Also worth noting, it's all weeklies, all puts that are the sizable activity. Also the 1240 puts. Also, it was a lot of 1x2s out here this week, Tim, which is kind of interesting in the Russell. We haven't seen this before. Again, 1400, 1240 this time coming up in the week 2 in June, doing 130 by 260, then 350 by 700. So again, a total on Wednesday and Thursday going up both days. So 1x2s were the order. Oh, I do put spreads. Order of the day in Russell 2000 E-mini options out here this week. I did not think we would say that. Again, that's one of the part of the fun of looking through the data live here on the cmegroup.com/TWIFO, because you find some interesting outliers to that. You know, Tim, this is kind of a topic we talked about before. I just mentioned a lot of action in the weeklies. By the way, of course, the vol up again net on the week, about half a handle or so, depending on where you're looking here in the term structure. But getting back to the weeklies, Tim, this is the narrative that's been very interesting. We've talked about it a lot across all of the products over there at CME. Weeklies tend to do fairly well, with the exception of Crude and a few other products where the weeklies haven't seemed to glom on. But the place where weeklies are really just the ruling the roost is in the equity options. It's just the lion's share of the volume is going up in these categories now. If you're not talking weeklies, you're not seeing a lion's share of what's going on out there. Is that kind of your takeaway as well? Are you still seeing a lot of your clients and customers migrating into short duration? That seems to be where the action is these days, Tim, in the equity options. Would you agree?
Yeah, absolutely. I mean, the short-dated options continue to be a very popular risk management tool for our customers, where we kind of continue to see that trend as people are, I don't want necessarily migrating out of the quarterlies, but definitely trading the weeklies and kind of some of the end-of-month options even in excess of what they're doing historically. So as the complex continues to grow and as volatility continues to return, I think people like the sweet spot of kind of what some of these short-dated, whether they be Monday, Wednesday, Fridays, or just Fridays, depending on the index, that they offer to the marketplace. So I think even going back where I think last year we were seeing kind of about 60% of the options trading is happening with less than 10 days to go to maturity, which is just a phenomenal statistic when you look at how that has changed over the years. And I think people are looking for more precise risk management and looking to manage some of their cost of carry, especially even though volatility has returned. Even with implied volatility in the mid-teens to 17, I think still people are very sensitive about making sure they're not overpaying for some of the carry without necessarily the reward happening on the horizon. And risk managers like the precision and not overpaying for theta. So I think when you kind of combine these things, it makes the weekly short-dated options very popular and very effective as people look to manage their risk in this environment.
Speaking of weekly index options, of course, everybody loves to play in the E-mini. Speaking of the S&P 500 too, Tim, you kind of just alluded to it. It kind of leaps off the page. Taco. It's not a thing most people have heard about or even know. I know you're not talking about delicious Mexican food, even though you are kind of making me hungry now, Tim, so maybe I'll have to go out for Mexican after the show. But that said, before we get into the E-mini S&P stuff, tell us, what the heck is Taco? What are you guys doing over there?
Sure. So TACO, which is an acronym that stands for Trade at Cash Open. So it's abbreviated to TACO, is a new feature that we launched this past Monday on the 14th that allows customers and market participants to trade the E-mini S&P 500 future at a basis to the official SPX opening print or the SOQ, the special opening quotation as it's known. And what this does is this allows those market participants, if you're a swap trader, or a options trader, or perhaps you have some AM expiring delta, like, perhaps Friday morning options today here on the third Friday in May, you could have, instead of doing convoluted jelly rolls or OTC combos or transactions, you can now do a simple taco trade on the E-mini S&P 500 future against that SOQ print. It's basically a very similar product to BTIC, which I mentioned, which is the basis trade index at close feature that we have on all of our products here at CME Group. And that's doing very well this year, where, that volume is up about more than 3x to almost 40,000 contracts a day across the major indices, predominantly in the S&P 500. But that popularity on the close of being able to trade the preferred product of a future at a basis to the official cash index close is now available in the open against the open. What's interesting, though, is just for anyone kind of keeping score at home, this is a product we've been working on for a few years. And we tried to come up with another name than Taco, but BTIO, or Basis Trade Index Open, was just not as popular amongst those that we tested on. And the feedback was Taco was so bad it was good, and it just kind of hung around. So we're very excited to roll it out. And Marco, as you suggest, I think it's a name that people are not going to forget. But early days here, we're looking forward to not only people embracing the name, but also embracing the product as they look to manage their AM expiring deltas or any type of benchmark trading that needs to be pegged against the open.
Yeah, whoever came up with Taco there, I think they deserve a promotion, Tim. That's a good one. That will resonate with the audience. Maybe we have a name for our show here. Our title, Talking Tacos with Tim at CME Group. Listeners, at the very least, will come away hungry. Talking all things S&P E-mini right now. Of course, things are lightening up. Kind of, again, you can see here, if you look at the reports for yourself, listeners, you'll see kind of exactly what we're talking about, the Russell versus the E-mini. Russell up about 20 handles on the week. The E-mini finishing the week off about 15 handles, right around 27.15, with about, again, talking that narrative of the weeklies, 23% of the overall volume coming in that front week 3 contract, which is expiring today in a few minutes as we speak. So that just kind of goes to Tim's point earlier, how much of this paper is going up in very, very, very near-term stuff here in the indices. And looking here at these levels, 2,700, the number one with the bullet option volume trade here in the E-mini S&P. Probably it makes a little bit more sense intuitively. You probably would guess it than you would in the Russell with those kind of funky out of the money put 1x2s. 2715 is where the index is. As we started the show here, 2,700 puts were the order of the day out here this week. Again, expiring today. These were going up nearly 38,000 contracts. The lion's share kind of tied between Tuesday and Thursday, about 10,000 each. Today and Monday also tied right around 6,000 and change. Again, net 38,000. The total about 5,500 of that opening. So a lot of back and forth on that 2,700 strike. Not quite surprising. It is an active kind of at the money strike. You're going to see a lot of opening and closing and just back and forth trading on a strike like that. Number 2 out here, probably not that unexpected as well. The 27.5 calls again in this week 3 expiring today contract. 29,000 going up on the tape there. The lion's share on Wednesday, 11,000, 7,300 on Thursday. The rest kind of scattered. Today, actually kind of quiet. Not a lot of love for the 27.5s today. Only 500 and change hitting the tape. Total of about 2,000 and change net opening. So again, a lot of back and forth on 2,700 puts, a lot of back and forth on 27.5 calls. And again, kind of reinforcing that narrative that the weeklies are where the action is. And in this case, very, very near-term weeklies are where the lion's share of the action is. Let's round out our top 5 here. Number 3, 2740s. So if 27.5 was too far out of the money for you, 2740 has you covered. 20,000 going up this week. Kind of broken even between Wednesday and Thursday, about 5,000 each on both of those days. Net slightly opening, so a lot of back and forth on those strikes as well. About tie for number 4. Let's go for our number 4 and 5. We'll do a tie. First off, between the 27.10 puts, again, in that week 3 contract, 18,500. The lion's share come in yesterday, 5,300 and about 5,000 going up today. Slightly opening of about 1,000. And actually, I lied. It was a little more of a tie because if you're feeling very optimistic and you don't want to trade the weeklies, you want to trade the monthlies like a June, then our number 5 will have you covered here, or actually be number 4. We'll bump the other one down to number 5 because it's slightly more. 19,500 of the June 2,800 calls. Lighting it up to take are actually number 4 of our top 5 here, with the lion's share coming again almost even on Monday and Thursday, 4,800 pretty much each on both days, 4,500 on Tuesday, about 3,000 and change today, about nearly 5,000 openings. So a lot of opening positioning on this monthly 2,800 contract, perhaps reflecting a little bit of optimistic sentiment out there overall in all things E-mini out here. A vol, kind of a mixed bag, but in general off a little bit more, a little bit up, a little bit in the farther off term structure. You guys know you've been paying attention to the implied vol out there in the E-mini S&P. Let's just scroll really quickly as we like to do in some of our products, see if any funky positions have caught our eye. And you know what? More 2,800s were going up in September. About 5,000 going up in September as well. So 2,800 is a popular strike. 28 halves, also worth noting here, going up in, these are the weeklies in July, doing 14,200 of the 28 halves. So if 2,800 is not optimistic enough for you, nearly 15,000 of the 28 halves going up out there in these weeklies in July. So a lot of action, a lot across the board here. In a variety of strikes. Again, that's why we like the E-mini S&P. It does a lot of paper. Well, Tim, we talked Russell, we talked E-mini, we talked Taco. Anything else cooking over there in the equities complex before we move on maybe to your other domain, crypto?
No, I think just the other thing to mention is just what we've also seen is just some increased activity in the NASDAQ. I think which is just off the back of some of the action we're seeing in the single stocks. NASDAQ tends to be another kind of good topic for customers to look at. We've seen some good volume in the options. That's up, still only doing maybe about 15,000 contracts a day, but kind of up over last year. So I think that's another, as volatility returns to the market, people are kind of hunting and gathering, so to speak, as they look across the indices for different opportunities. So I think the NASDAQ is something that also has seen some action as people are looking to trade some of the FANG stocks against the Qs, against the NQs. And I think that's just something that, is also exciting to watch. And it's good to see all major indices at CME rocking and rolling. And so things are good at equity index land at CME.
Well, places are also good in another area that you tend to work in. You got a good purview over there, Tim. In fact, you were going to come on last week, and you hinted, you say, if I wait a week, I could talk about some more cool stuff. And the more cool stuff tended to fall in an area that a lot of people are interested in these days, Tim, which is crypto. You guys announced on Monday over there at CME that you're expanding your horizons, your holdings there in the crypto space. We all know you have the Bitcoin reference rate and the futures on that product. Now you're expanding that over to another hot, exciting area. People are really interested in another product out there. It's Ether. And so you guys have announced the new index here for Ether dollar pricing and the Ether dollar reference rate. Why don't you walk us through what exactly you guys announced and why you guys decided to go that route?
That's great. Yeah. And cryptocurrencies and Bitcoin futures are keeping us busy at CME. But we were very excited on Monday to announce the launch of the CME Crypto Facilities Ether Dollar Reference Rate and Ether Dollar Real-Time Index. And as you mentioned, Ether is the token that trades on the Ethereum network. And in response to customer demand for increased price transparency on the second most popular cryptocurrency, being Ether. About 72 billion by market cap, and trades about 2.7 billion per day. I believe we are happy to use the same BRR, which is the Bitcoin reference rate methodology, as we expand now to the new Ether reference rate and Ether real-time index. So it's very exciting. One of the differences for the Ether reference rate and real-time index is that we have two constituent exchanges, which are Bitstamp and Kraken, and they represent about 20% of the Ether dollar trading in the spot market. So a slightly less constituents than in the BRR, but not everyone is trading Ether on their platforms. We're very happy to launch the reference rate and real-time index with those constituent exchanges this past Monday.
And so what was the thought process there? Because obviously people are already hitting us up with stuff. Why not Litecoin? Why not Ripple? You can never please everybody, Tim. How did you guys settle on Ether for the next addition to the CME crypto family?
Yeah, with a lot of product innovation at CME, we continue to look to customers for inspiration and guidance. And with Ether being the second most popular token, it made very good sense to roll out the pricing methodology and the pricing products on the two indices and reference rates that we launched. So it's going to be in collaboration with customers, in collaboration with our partner crypto facilities in the space, who is the index administrator and calculation agent. And it was just a matter of kind of some brainstorming. And, as you mentioned, we can't necessarily do everything at once. Everyone has lots of favorite tokens in the marketplace. So there is some investment that we make with regards to technology and making these indices available not only on our website, but also on our data mine, which is our historical platform, as well as our market data platform, NDP. So there's just some investment and some prioritization work that is entailed. So we picked Ether because that made the most sense given its prominence in the marketplace, as well as the feedback we were receiving from customers.
And now you guys announced an index, so a reference rate, so people have something they could watch and track. Obviously, people they're going to want to know when they could maybe expect to do some trading around that Ether reference index, so reference rate. Any outlook for those folks?
Yeah, no commitment yet to launch futures on the product. The pricing product that we just put out there, Bitcoin futures are keeping us busy with their volumes up nicely. Where April was more than triple what we had done in January, and set some new records in April. So Bitcoin futures are keeping us fairly busy, and that is the primary focus. And the Bitcoin reference rate came out in November of 2016 in response to customer demand and engaged customer interest before launching the Bitcoin futures in December. So we're very interested in working with customers to continue to hear their demand for future products in the future, but no plans for an Ether future just yet at this time.
Well, Tim, the other big question we're getting from all of our audience here, and as soon as you guys announced this, we started getting this question again. In fact, so much so that we codified it in that age-old way to do it, of course, the Twitter poll. We said to our audience, hey, CME just announced their new Ether index this week, expanding the universe out there of crypto indices. But at the end of the day, we know you guys all really want to sink your teeth into more tradable products. So which products are you guys looking forward to see next in the crypto space? We gave them 4 choices, Tim. We gave them Bitcoin options, Ether futures, Ripple futures, or Litecoin futures. This has about a little bit less than a day left. It's been running most of the week. I bet you could probably guess what our audience is going for, Tim, but what do you think our audience is choosing there in that poll?
Well, my intuition is telling me that it's going to be Bitcoin options, number one, but I'm not sure. I haven't seen the results yet.
Well, that's good. We don't want you to cheat here on the show. But yes, our audience clearly deep in the options weeds, and that's what they want. 74% saying they want themselves some Bitcoin options, a tie for number 2, Ether futures and Litecoin futures. Ripple coming in a distant third, only 6%. I thought it'll get a little bit more love there. So, Tim, the folks have spoken. They want this. In fact, this is probably one of the number 1 questions that we receive on a regular basis on anything crypto is when the heck are we going to get the options? Of course, we all know the futures all launched last December, the Bitcoin futures. So they, as you mentioned, they've been doing well, setting new records. We've had a number of settlements out there under our belts. So everyone's asking me, I'm going to ask you, Tim, when can we expect to see some Bitcoin options trading in our future?
Yeah, it's another great question. I'm not surprised by that Twitter poll because I think this is definitely one of the most popular questions we've got. even right after the Bitcoin futures announcement on Halloween of last year, and then launching the future in December. Given the popularity and the great milestones the future has achieved, I think this is a very natural questions to come from market participants, and especially this audience, that has a little bit more of an option slant. Similar to my comments on Ether future, we don't really have current plans to introduce options on Bitcoin futures at this time, but we'll continue to listen to customers. The demand is there, but there are some unique challenges that Bitcoin options on futures or Bitcoin options would present to the marketplace that we need to work through. In terms of Bitcoin reference rate, you'll know that the reference rate is a little bit new. So we need to engage with customers around what potential product specs might be, what is the strike array listing, what is the listing cycle. Some of these questions and product design features that we take for granted as widely accepted in equity index land, we're not sure if they're appropriate or germane for the crypto space. We also have to do some work on hard forks and how we'll handle that if that occurs in the marketplace, and what's the right strike interval. And then when we look to some of our liquidity providers, we have to work with them and make sure that they can have the appropriate capital set aside to market make, and they're very capital efficient with respect to that, and make sure that working with them, that if we were to move forward with any type of option product, how would the liquidity provision be supported? So just lots of things to work through, and encourage all the listeners and our customers and market participants to keep on providing that feedback to you and to the CME, because this is not something that we can do in isolation, and we'll have to work on it in response to customer demands and work with market participants for future product innovation in the crypto space for sure.
I'll be sure to forward all their emails on to you from now on, Tim, from me. So I'll just inundate you with all the questions we get, about at least a dozen around this topic every week, if not more. When are we going to get the Bitcoin options? So I'll just send them all to you, Tim. That'll make my life certainly a lot easier. But you raised some interesting points there, and I think that makes a lot of sense to have to work some of that out. People want this stuff. I know myself, everyone was asking us at the beginning of the year, when can we expect, the futures had just launched, when can we expect crypto out? People were thinking within a few weeks. I thought end of Q2 it sounded like a decent, reasonable time frame for everyone to get all that stuff worked out. We're kind of getting up on there, and it doesn't seem like anyone's got any wherewithal to launch Bitcoin options anytime soon. So it seems like it's going to be probably a little bit later than my prediction as well. Maybe Q3, maybe even into next year. We shall see. By the way, another question we get a lot, and I'm sure you probably do too, since we're talking product specs and contract specs. A lot of people have asked us, because you guys launched that 5-coin contract, which was a pretty beefy contract, particularly when Bitcoin was hovering around 20,000 a pop or so. That made for a pretty expensive contract. Have you guys had any discussions internally about maybe coming out with like a 1-coin contract as well, or are you sticking with the 5 for the foreseeable future?
For now, we're committed to the 5-coin future. That our BTC future on the BRR has a 5-coin multiplier. And I think, there was a lot of conversation around it when we first launched, and based on the feedback and the customer demand that we've seen, we thought that was appropriate. I think also given how our contract has performed in the market, that I do think it is the appropriate size for those people that are looking to access Bitcoin or to manage their associated risk with actual Bitcoin, whether they be a miner or perhaps accumulating positions in the spot market. When we look at some of the activity we've seen in the month of April, where we're doing just about 3,800 contracts a day. When you look at it in terms of like the Bitcoin equivalent, we're talking about 16,000 Bitcoin per day, which is a fairly nice liquidity pool, even when comparing it to some of the spot exchanges in the marketplace. So I'm confident in our product design and product offering to date. And when we look at some of the record volume that we had on, I think it was back on April 24th, we did about 11,202 futures contracts, which is over 56,000 Bitcoin for the day. I mean, so that's just, I think it was about $203 million that day. So I think the large contract, when you look at it from a risk perspective, seems to be not only working for CME, but also working for the market. But that being said, we continue to engage with customers, and should the need be articulated that we need to look at various sizes, we're all ears. Our primary goal is to make sure that as we all traverse into the new and exciting world of crypto futures and cryptocurrencies, to make sure that we continue to meet the risk management needs of our customers in operating an efficient, transparent market And sometimes you need to make tweaks to products, but we think we have the right mix right now. But that's, something that's always subject to change based on how the market evolves and what customers need from CME.
Well, Tim, people are hitting us up with questions on this topic, so I will spare you more of my questions, and instead I'll open up the floodgates to our listeners with a little bit of our futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. This is your portion of the show, the portion where you guys take the reins, your questions, your comments, your insights. A lot of people, as you might imagine, have some similar threads here. Tim, like Andrew Sullivan says, when are we going to get Bitcoin options? I don't want to touch the futures, so I'm left sitting on my hands during these crazy moves. I'm with you, Andrew. I just asked him that, so hopefully you got your answer. They're working out the contract specs and everything like that. But I'm of your mind and of what did Warren Buffett say recently. I'd love to buy a put on Bitcoin, but I sure as hell don't want to short it. I'm definitely in that camp. These things are moving a couple of hundred handles at a clip every time you check them. So I could see how people, especially in our audience, are waiting for the options. Let's see. Oh, here's one from Bob. Tim, this is actually about what you were talking about earlier. Bob Jensen would like to know, when would it make sense to use taco, and when would it not? So there you go. Your taco terminology is already resonating with the masses here, Tim. He wants to know when. I know you kind of touched on it earlier. Maybe give us an example. When would somebody really want to use taco?
Yeah, that's great. And I think the alliteration is sticking here. Talking taco with Tim on Twyfo, right? So glad to see.
That's good. And I'm getting hungry.
Here,
I'm getting hungry, so I know where I'm going as soon as the show is done as well.
Yeah, for sure. So I think there are a few different use cases for traded cash open or taco. I would say kind of some of the primary use cases are around managing AM expiring deltas of cash index options on the S&P 500 or OTC options, where you're not necessarily making or taking delivery of the future as you would with a CME group option on a future. But if you are trading that kind of cash index varietal listed or an OTC, it's a good way to get futures delta to replace the expiring option against the same SOQ or the same observation that your options are coming off the board against. Also, there are some SOQ or special opening quotation starting swaps that are out there amongst market participants. So anyone who's kind of trading SOQ or SQ to SQ swaps, this is another great way for them to use a futures hedge against that OTC swap instrument. And then if you look kind of across the globe, there are a fair amount of ETNs and notes and warrants and certificates and structured products that are issued by some of our friends and market participants in London or Asia that like to use the open of the market because it comports a little bit better with their trading day. This is another way they could peg their futures expiration to some of their embedded note or structured product observation that may be off the index open as well. So I think those are some great use cases. We also have some feedback from customers, who are looking for different ways to arb some of the activity around the open. I think that will be a little bit more muted than what we see in the basis trade index or BTIC product, the basis trade index to close product, because there's a little bit more velocity going into the close. But kind of nothing, you don't have that same velocity pre-open, and this all kind of happens at the open. But some more people are looking at outright futures versus taco or some of the other products or some of the ETFs that trade a little bit pre-open. So I think these are all kind of use cases, and we're very excited. It's early days, we're on our fifth taco trading day here this week, so we'll continue to see adoption. But those would be my guesses and kind of who I think the early adopters will be of taco.
Talking taco with Tim on Twifo. I do like that. We'll have to figure out a way to work crypto into a T, into the T alliteration, and then we're pretty much all set there. I like it. So there you go, Bob. There's your breakdown for taco. Asking you shall receive. Flyer's got a question. I may save this one for when Nick's back next week because his team is actually doing this. But he says, Flyer wants to know, how is Bitcoin's volatility calculated? Is a limited supply and abundant demand a current driver upwards for price? Well, a lot of people, I think, probably argue the latter, perhaps, because it has sold off. So maybe not as quite the driver it once was. You probably could argue a lot of that early price movement to the upside, what we saw going into December, was probably due to the limited venues you could actually sell the thing on. You certainly couldn't short it. So once the futures came online, we saw a lot more venues to actually sell. And that, of course, contributed probably to a lot of the downward movement we saw. But the first part of your question, how is Bitcoin's volatility calculated? I think Nick and his team could talk about. They actually are doing that right now. They're implying vol. Of course, you can just look at the BRR, the Bitcoin reference rate, and see how much that moves and calculate a volatility off that or off the future. That isn't too hard. But they're also doing some other steps to interpret some volatility, to try to interpret the skew of some potential options that will be listed on these things. So they're doing a lot of cool stuff on that space. I think I'm going to mark this one as I'm going to save it for next week. Unless you have some comments here, Tim, on the calculation methodology for Bitcoin volatility, sir.
No, we'll let Nick handle that one next week. I saved some good stuff, so they couldn't since he couldn't join us today.
You got to give him something to talk about, right? Let's see. I'll give you a break here with this one, Tim. Then we'll pretty much wrap it up. Barry Allen wants to know, do you think the recent oil fracas, so I like that word, that's a good word, has the potential to blow up the Brent WTI spread well beyond $10? Good question. Kind of timely. Didn't have a chance to dive into crude too much on the show here today. But you're right. The whole Brent WTI thing has been going crazy. Brent hit 80. Earlier this week. We're not seeing similar levels in WTI, so that spread, hit actually 8.25 a few days ago. So that's a pretty extreme level. If you've been following that spread at all, it was about $1 throughout most of about 2016, gapped up to about 3 and change back in 2017. And then coming into earlier this year, it already had expanded more, got to about $5. Now hitting 8 and change earlier this week. So this thing is shooting up, which is interesting. There's a lot of back and forth about why exactly that is. Obviously, the Iran stuff deals mostly and impacts a lot more on the Brent side, so that's why you're seeing a lot more increase there. Also, there's some other weird things going on with domestic production, with things like the pipelines in the Permian Basin. They've reached not their production capacity; they can produce more, but their pipeline capacity. They can't really ship any more oil. So they can produce more if they want, as much as they want. They can't ship much more than they have. So the ability of the shale producers to maybe drive down prices a little bit will be mitigated for a while until they can figure out this whole pipeline and shipping thing. Also worth noting, Blue over there, our buddy Blue Putnam at CME put out an interesting report. And he did mention this in his report last week. Let me see if I could pull it off from him. He thought that... I'll use his own words for him. He says, while shipping costs are notoriously hard to estimate, a $4 to $6 per barrel cost is plausible depending on distance, term of contract size of ship, speed of ship, etc. He thought that would put a soft cap on the spread of WTI to Brent. He thought it'd be a soft cap of about $6. So he thought the spread would be capped at around 6. We've already exceeded that to about 8.25. Again, estimating the vagaries of these spreads is a challenge, but interesting stuff. So people have been looking at this for a while, and you're right, it is widening. Is it going to blow beyond 10? That would be pretty impressive. That would be a level we haven't seen in quite some time. Even 8 was pretty impressive earlier this week. So we're going to keep an eye on this one. Then we'll get more into this on next week's show. But a really good question and a lot of interesting stuff firing off in the crude space right now for us to dive into. Let's see really quickly here. A lot of other questions, but all crude and gold and everything else like that. Here's a good one for you. We chatted about this with Sean last week, Tim. I think we'll end on this one. This is a good one for you as well, though. I want to get your thoughts on it. This came from Chi-Town Rick. He wants to know, is CME adding more than just the E-mini Russell 2000? So he wants to know, will there be like a big contract or maybe more Russell indices added in the near future? This is your purview, sir. What do you guys have planned for Russell in the near future?
Yes, our primary focus is on bringing the Russell 2000 index back to its back to its home at CME and its rightful place of prominence in the U.S. and global equity index market. So in terms of, don't necessarily immediate plans for additional Russell-based indices, but some of our focus will be on increasing some of the spread trading that's available for the Russell 2. I was historically background as an index trader before joining CME. I'm a big fan of, the Russell 1 versus S&P 500, the Russell 2 kind of versus a mid-cap and small-cap basket. So I think just enabling some of that spread trading is a big focus for us, as well as making sure that we continue to invest in the options and develop that liquidity pool for our customers. And I think the other thing is, just the Russell 1000 outright. That's something that's done reasonably well and has decent open interest, but a little bit of a laggard from an ADV perspective. So that's something that myself and my good friend Sean Smith, who's absent today, that's something that we've been talking about, is how do we get the market re-energized about the Russell 1000? How do we, there's a lot of index AUM tied to that product out there, and how do we kind of bring back the glory of that S&P 500 plus 400 versus Russell 1 spread that we saw, a lot of people trading, back circa 2006, 2007, 2008. So I think, that now that the contract's back on CME, we'd like to get some of that going with market participants. So I would classify more of our energy and effort being expended on building the existing complex that we have and getting the velocity going there, as opposed to continuing to add new index contracts at that time. But just like I said, with a lot of stuff, whether it be the Ether race we were talking about or Bitcoin options, we're all ears when it comes to customer demand. So if customers want it, that's really what's going to drive our innovation and our product extensions next. So kind of to the listeners and the participants out there, just keep on pinging CME or Sean at FTSE Russell and let us know what other indexes and other products we can bring to the market for you, because we're all ears.
Well, they'll certainly do that, Sean or Tim, and they'll hit us up on this show, and we'll be sure to let you know. But that music means you did it, Tim. You survived. You made it to the end of the program. That music, of course, means we've come to the end of another epic journey to the world of futures options, talking some different stuff today, which is kind of fun, to deep dive into equities. Also got a chance to talk crypto. So now all you people who've been asking me forever, when we're going to get the options, are there going to be a split on the futures? There you go. You heard it from Tim himself over there and his team over there, what they have planned for the future and what they're working on. So there you go. Hit up Tim. He could stop bothering me for a little bit here on this one. But before we go, I'm just kidding. We love your questions. Keep them coming. Even on all things crypto, that is impossible for us to answer. But before we go, Tim, you already hit on a lot of stuff coming down for you guys. Just launched Taco. You got the Ether. You had a kind of a busy couple of weeks. But that said, if there's anything we didn't touch on, or perhaps you want to leave our audience with yet another hint, yet another teaser of what they can expect from you guys on either the equity or the crypto space at CME. Now is the time, sir. Have at it.
I think we're good. I think we'll go out on a high note. We've covered a lot of ground today, and thanks again for having me. I enjoyed kind of stepping into the co-host role today. It's fun, and it's been exciting. We love talking about the Russell 2000. We love talking about some of the innovations we have with Taco and Bitcoin and Ether. So I think the alliteration will continue. Where we're talking 2000 tokens, tacos with Tim on FIFO. So there we go.
Tokens. There you go. You did it. All right. Now we have our title for Tacos Tokens with Tim on TWIFO. I like it. I think I can go for a little bit of alliteration. I promise the next time we get you on, we won't make you work quite so much. We'll have a few more co-hosts to bounce off of and make your life a little bit easier. Of course, speaking of those co-hosts, our friend Sean, we're wishing him well, that hopefully he can join us next week. He'll have recovered from his bout of pneumonia, which is some serious stuff. You want to take some time on that one. In the meantime, of course, if you want to learn more about all these products we're talking about, CMEgroup.com, or head on over to FTSE Russell, FTSERussell.com. All that info is there as well. And while you're heading over to places, make sure you head on over to Bantix.com, BANTIX. Click on the sign up for Quick Strike. You can see all the cool stuff we're talking about here on the show and all the reports. If you want to sample them for yourself before you sign up, head on over to CMEgroup.com/TWIFO. You can see all the reports there for free as well before you make the plunge into the premium, the pro stuff. And if you're trading these markets and you're not using that stuff, I don't know how you're doing it. It's kind of the only game in town. So Bantix.com to learn more. And on behalf of Nick, who couldn't make it, and Sean, who also couldn't make it, and Tim, who ably stepped into the fray, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And of course, for sending so many questions. Keep them coming. We love them on all different topics. I was just teasing you earlier. And of course, we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.